Hello guys, welcome to ARCs. So yesterday we talked about market structure and how we read it. And today I'm gonna show you the trade it took yesterday by using the market structure. So he was on NQ, the US 100. So he took the trade. And first thing first, so let me just pick out this level here because the trade happens around this level. So it's gonna get easy like this to explain. So first thing first, when I saw market, I will check the highest time frame as possible. So on this case, I use the 1 hour. You can use the week, the daily, whatever you like it. But in this case, I use the 1 hour because I'm gonna trade on the 5 minutes. So, and I need to see because you can see clearly the market's been follow the structure perfectly. So the market been respect these levels. Market's been break structures around. Structure break here. Nice. So we are bearish. And again, the market break structure once again here. This new low there. This main low, this main break of structure is the most important. This is not much. This is the most important because it's the new low. So when the market create a new low, they start the pullback. So you just need to see the market change that pullback. So the counter trend become the same direction of the main trend. So the main trend is bearish, now is bullish, now is bearish again. So you have both trends in the same direction. So that's how you want to see. And you need to mark some levels that the market been respect. So you can mark this supported level, the market has been respect. So the market test once, sweep them out, come back again, push and high, build liquidity, test once again, trying to go higher, fail, drops and come to retest. Perfect. So at this point, you have a level. So, and if you drop the time frame to the 50 minutes, what I saw here was okay. So as soon as the market taps into that level, great. What they did, so they take out this liquidity, all this liquidity here, all this can be this one. You just put like this. So after the market swept the liquidity, taps into this level and give us the direction. That's what you want to see. They break the structure. So from that point, the market now have the main trend bearish and the counter trend is become bearish. So perfect. What I saw was okay, I go to the 5 minutes right now and I need to take this trade. So what I saw was okay, so I need to find level and like a target, and the target you need to looking for equal lows or equalize, depend on if you are bearish or if you are bullish. So you can see here this level here, you have these equal highs there, equal lows. So you have these equal lows, you also have these ones here as well. So you have these equal lows. Let's mark them out. You already know that taps into there. So now as soon as you define the target, they need to see what the market is doing. So after the market break this structure, start pushing up again, I need to see what they do. So the market been respect this structure as well. Oh, this structure, the market been respect this structure. Taps once again here. Put them here. There, come on. There we go. Taps once here again. So I need to see the market now give me displacement, break structure to the downside once again, because after the break of structure, the market showed a trace and they did. And then it need to show again the same direction. So in what the market did was break structure here. So as soon I saw that, I said, okay, I say, looks interesting. So let's get ready. So the markets dropped. I saw this as a trap. We will talk about that later on. So this was a trap. I need another confirmation because after the markets take out this break this structure, push it back once again, but it's completely normal. Every time the market break a structure, show the trace, and that's what they did. And after that confirmation, I saw, okay, the market respect the level, swept the trap, perfect. First sellers getting out. Now they give a reason, they give a big candle, break again the structure here, perfect. But this is based on follow the structure, so you need to see the break of structures all the time. So, and I jump in on this next candle. This was my entry point and was my target. So let me show you. We have around here. Let me come here. It's better. There we go. So you have the entry point. Was on the 5 minutes as well. That candle. Let me put just this was 5 minutes. Okay, so as you can see, after this, you have the big candle. On the next candle, that's where you get in. So you get in around here, this level, and then it targets the low, and the low target. So bank profits around here, the bank profits there, and then it, yeah, it closed the full trade there. Now the result. The results is not important, but it's good to show because we like transparency of what you do. So this was the trade he took. That was the results of the trade. And yeah, just basing on follow the structure, nothing else. And that was the trade. And just by follow the break market structure, just the structure, that's the most important. You don't need anything else. You can add a few things just to get the market more clear, but no much than that is more than enough. And don't forget, you have a video tomorrow based on price and time. And see you later, guys.